Good morning, everybody. Good morning. Welcome to the opening bell. Ashley Reeve here, guys. It's really good to be with you here this morning. Before we get started, remember the information we discuss in this video is opinion and should not be construed as advice in any way. All right, so let's get going with this morning's opening bell, yeah? What an interesting, time that we have. A lot of movement happening in the market at this point in time. So to everybody that's here for the very first time, a warm welcome to you again. It's a pleasure being with you here. Just a note: we will be having a trading room later on this afternoon. Later on this afternoon at 2:00. Transfer, I see you there. Good morning. Yeah, it's a long one, man. It's a long one. Monday as well, Family Day, formerly known as Easter Monday, but it's Family Day. And then obviously tomorrow, Good Friday. I hope you guys have a fantastic long weekend for the Easter break there, yeah, with your families and so forth. Be safe on the roads, yeah. Also, on the other side, we have quite a bit happening with President Trump, and we have seen that there's been considerable movements across all the asset classes based on the speech that, or at least the remarks and the statements that he mentioned yesterday. We're going to start off with gold here, and let's just have a look-see of what's happened here. So from a daily perspective, look, we were doing phenomenal, guys. We were doing great. We were doing wonderful. There was so much divergence. There was so much, I'm not going to say, use the term hope here, but there was a lot of positivity that came from the moves that we saw. There was a lot of gains, a lot of breakouts based on the oil price that came down. We saw the dollar weaken a little bit there, which is good for the rest of the country, for the world. But obviously, when you look at it from the inflation perspective, it's not that good, yeah. So we saw price, or at least the gold, move up just shy of the 4837. And this morning we saw something totally different with Trump making his remarks there towards Iran. I mean, specifically saying that in the next 2 to 3 weeks, there is going to be a ramp up in the military action against Iran. And this is very important, guys. You know, many guys don't always speak about it. They don't always give any, specific facts about it. We do know, factually speaking, that Israel has responded to this as well. They are going to continue as well. Iran did come out. They do reject any U.S. narrative and claims. Before Trump's speech, actually, Iran's president publicly denounced U.S. claims, calling the U.S. messaging full of distortions, and they've been asserting Iran is not a threat. All right, so this is framing itself, or at least framing itself as a defending, as defending against the U.S. aggression. And Iran, obviously calls strikes unprovoked and illegal. We know that Iran's foreign ministry condemned the U.S.-Israeli strikes as a brutal air operation, and said Iran will, continue attacks in defense. There's also, obviously coming from a, reasons why Trump did what he did. Well, number one, military, strategic reasons. He wants to hit all Iran's nuclear, missile and drone capabilities. He wants to put pressure on Iran to secure key shipping lanes like the Strait. And then obviously show a little bit of strength to the allies. Number two, it's all political, and that it can also filter into the domestic side of it. All right, so that's important. Something that I must say here this morning is that there might be a lot of people that agree that he wants to appear tough to voters who value strong national defense. That you can't vote that out, all right? And obviously gain leverage in that in the negotiations in Iran, and distract from the domestic political issues or for that rallying of the support. And then lastly, perhaps the third reason is for the economic market. Higher oil prices from tension can benefit the U.S. Energy strategy, as well as the stocks. And obviously, it's a signal that the U.S. seriousness is serious, and he's signaling that to the global markets and the allies. So we are seeing that the dollar strengthening has pushed all the other assets the total opposite way. So look at the gold price. Let's start here. All right, we gained considerably. All right. For at least a day and a quarter. All right. So that was today's Thursday. So Tuesday we had the breakout. Yesterday we had the gains there, and we've reversed all of that now. Look at that. That's the gold price. Euro USD here, same. About a day ago, you could see we had pushed up significantly here, and we've reversed all of that now. The same with GBP USD. I'm just going to go across the board. You'll see it. Look at that. Up, and we've come down. USD JPY, the same here. We have gone down, and we've reversed all of that. NZD USD, the same here. We went up, reversed all of it. USD Swiss franc, exactly the same thing, came down, reversed it. S&P 500, beautifully done here. We pushed up so nicely, all right, and we've reversed half of that. US 30, same thing, went up and we reversed. NAS 100 went up and reversed. So it's across the board. Look at the oil price. We came down very nicely to $97 a barrel, and we've reversed all of those losses there, or at least the decline, and it's gained now to $105 per barrel. Even the silver price pushed up nicely and came down. Now, what we must also not forget, though, all right, even although it was affected, overnight, what we must also bear in mind is that the structure, all right, has not been violated considerably. When I say structure, I'm referring to the technical side. Okay, we have gone up, we've created a high. There's still divergence here. So if you look at it from a structural perspective, this is a higher low. If you technically look at it, all right. So there's the high, higher high. This is a higher low. So we've now created a new higher low. So what we're anticipating, all right, is for the gold price to continue its momentum to the upside. Technically, all right, that's technically speaking. Fundamentally, we can't speak to that yet because we have 2 to 3 weeks of military, political, economic talks that's coming. That's what Trump gave as the retaliation period, or at least, the escalation period. He said in the next 2 to 3 weeks, all right, they are looking to escalate military action. So we have to bear that in mind. Even although technically we've created a higher low, we are still looking at more upside for gold. For Euro USD, all right, at this point in time, we are still looking for some more upside here. All right, it's just corrected. It's a sharp, deep correction. The same with GBP USD. If I go to the 4-hour, I'm looking at the higher time frames now, all right? We went up. This is a higher low. Don't forget that. This is a higher low. Unless we push below this area, then it's affected. All right. The same with the USD JPY. That is a low. This is now a lower high. So we expecting price to come down again. But again, this is the technical side of it. It does not mean that fundamentally it's going to happen. All right. NZD USD, looking at the 4-hour as well, we pushed up. We created a new high there. And we want to see what happens. This is a new higher low that's formed. Same with USD Swiss franc, guys. So in as much as all the gains, all the losses in the oil price has now reversed to gains, and it's increased again. That is the fundamentals overnight, but the structure is still in place. I mean, look at the S&P 500 here, all right? S&P 500 has pushed up. This is a higher low. If you look at it from a structural perspective, that's a higher low, all right? If I zoom a little bit out here, you're going to see it. Look at that. That is a new high. So I can show you the divergence here. Actually, let's go and look at the divergence. Let me go to a lower time frame, and you'll see the divergence here. There it is. Even on the 1 hour. Look at that. So here we have price in this way. Look at that low. Look at that low there. But look at the strength of the price here. It's actually pushing to the upside. So this is just a very deep higher low. If we break and we come down here, no, then we're going to speak something totally different. All right. Now, if the oil price continues to strengthen, then obviously that's a reality. We could be seeing this happening here, the stock market coming down. All right. Traditionally, we would have seen far more upticks when it comes to companies because they can manufacture, especially during war. Myself and our head of sales and a key individual there, Xander, had a chat this morning, and he mentioned that as well, that during war we should be seeing a little bit of an uptick when it comes to some of the companies, because obviously there's a lot of manufacturing that takes place. But this is, if you look at it from a war perspective, it's not a fully blown war yet. And I'm using yet very interchangeably here, all right? It may not even get to that at this point in time. It may not even get to that because we've not seen the U.S. suffer the way Iran has suffered when you look at the facts in terms of what has been attacked, the capabilities. I mean, the U.S. is still in full control of its military capability versus the 80 to 90% destruction that has been given to Iran, all right? So those are also things to consider, even although I do agree that, that there should be a little bit more of an uptick. If the U.S. was really at war, we would have had a lot of companies coming in to produce. But at this point in time, the U.S. is still secure in their specific land. All right. So, guys, let's see how it goes. We'll be having a trading room at 2:00 today, and we'll be looking at more of this technicals. I'll be going into a little bit more detail. Absolutely. I'll be looking at a bit more detail. For now, I just wanted to give the update on what is happening at this point. But please watch the gold price. Watch these guys here, because this is a fantastic higher low, structurally speaking. We're just going to have to wait and see. Does it find support here and then push up? If it does, then we know that we're going to see a bit of that oil price coming down once again, because it's really pushed down. And this could just be another lower high. I do see a bit of more exhaustion coming in when it comes to the oil price. I still see more exhaustion coming in to come back here one more time to the $92 per barrel. But again, that's just a view. It doesn't mean that it's going to do that. I don't see the correlation between the gold, from a commodity perspective, and the FX as well as the oil. I'm not seeing the correlation pan through long term, for oil to be going up all the way to 135, 143. I don't see that yet for me personally. You guys may disagree with that. That's what we have the opening bell. That's what we have trading for. There has to be healthy, opinions. And if there's disagreements, that's fine. It's good, because that's how things move. So I don't see the oil price going all the way up there. It just wouldn't make sense for the global economic framework and the structure, and it just wouldn't make sense unless there is obviously a shifting of power in a totally different way. But right now, I'm not seeing it. I'm seeing the oil price come down still, maybe one more time to $92 per barrel, and we could be above the 90s or ranging between the 90s and the 109, because we saw it here as well. There was always a range here. That was 59 and 70. And here we were at 64 and 73. So it looks like once prices move to a new range, we range in between. All right. So I'm seeing it here in 2000. I'm seeing it here, not 2000, in this month, January. And I'm seeing it here in February. We were at 58. We went up to 70. We came back to 58. And then we were peaking at 73 before we had the breakout. So let's take that into consideration. Let's see how it goes. In this specific case, last year, we were at 64, 69, 69. We went down to 65, 58, 65. Look at that. So there was between the $50 and the $70 a barrel. And this was for a couple of months. All right. 1, 2, 3, 4, 5, 6, 7 months. We were ranging like this. All right, between $50 and $73 per barrel. So now is month 1. All right, that's March. Month 1, 114, and the low was 76. Huge distance between the two, yes. So we'll narrow it down to this area over here, 113 and 91. And then it got smaller, 108 and 97. So let's see what happens between the 108 and the 97. Do we break? Do we come? Do we range? We'll have to wait and see. Or do we go to the broader side of the range there, or to the downside here? So let's watch this space very carefully. and then we'll take it from there. All right. But trading room at 2 o'clock, guys. At this point in time, dollar strength has come into the market because of the oil price that has surged and rallied to the upside. Everything that we saw as a gain yesterday has been wiped out overnight, and that's due to some speeches that's been happening. So that's very powerful for you to observe as a trader. Look what fundamentals politically and economically can do to the market. All right. I'll see you guys a little bit later on, 2 o'clock, Ashley Reeve. If you've not opened up an account with us, you can visit www.tdmarkets.com. You can also email us at care@tdmarkets.com. Have a fantastic morning, guys. See you guys very soon. That's 2 o'clock via YouTube. Ashley Reeve, and I'm signing out. Ciao, ciao.